Unsold inventory in the two biggest housing markets in the country, Texas and Florida, both declined this week. Fewer homes for sale now than a week ago. Inventory seems to have peaked for the season and is slowly inching down in those markets. There are probably two reasons that we're seeing that seasonal inventory peak in unsold inventory now, when, for example, last year, inventory in these states didn't peak until the end of November. Last year, we were facing a rising interest rate environment. This year, rates are falling. As I've mentioned before, rising rates creates rising inventory. Maybe if we're lucky, we're finally on the other side of that slope, making for better dynamics for potential buyers. There's no sudden surge in buyers and maybe just a little bit of firming of demand. Withdrawals, though, are on the rise too. So 30 or 35,000 withdrawals of listings each week now. These are listings that didn't get offers and are pulled from sale, where last year it was more like 25,000. So that probably reflects that some sellers are discouraged from a long time of low demand market. So they pull the listing, maybe wait till next year. It also reflects that most homeowners in the country have ultra cheap financing and they can afford to not sell in unfavorable conditions. There's just no urgency to sell. So these two trends together are keeping a cap on inventory for the rest of the year, especially compared to late last year. Last year at this time, inventory nationally climbed 1.3% for the week because rates were still rising. This year, rates inching down, as we've discussed, and so this should lead to compressed inventory growth. So nationally, the number of unsold homes on the market rose less than 1% for the second week in a row. Inventory growth is slower than last year. This has implications for pricing, for buyer competition, for the transaction volume in the fourth quarter and into 2025. At Altos Research, of course, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the sales, all the changes in that data, and we do it so you can understand what's happening in the market way before you see it in the traditional headlines. So I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the data, the U.S. housing market, as we're getting close to the end of August 2024. So there are now 704,000 single-family homes unsold on the market. That's a slight increase from last week. Inventory growth is slowing as mortgage rates fall. So it would be normal in previous years for inventory to top out in August. So this flattening isn't like a big deal. It's just important to point out that we're on the other side of that mortgage rate summit. So last year at this time, rates were climbing still, and this year they're finally falling. Last year, inventory was rising much more quickly, and this year that rise is slowing. Even though inventory has probably peaked in Florida and Texas, the number of unsold homes across the country hasn't topped out yet. What we're seeing is maybe a rebalancing of the trends. Though in the first half of the year, we had a really bifurcated market with the Sun Belt growing inventory quickly, and then the Central and Northeast remaining very restricted on inventory. Places like in Ohio and New York still have inventory growing now, and so these trends seem to be evening back out. Because of this, inventory nationally might not top out still till October, and we're currently expecting about 715,000 homes on the market unsold, by maybe late October. In total this week we measured a 6,000 unit gain, so that's less than 1% again this week. In this chart, the relative tightening compared to the last 2 years will happen after mid-September, because in 2022 and 23, interest rates spiked in September. And you can see 22 and 23 in the lighter two red lines here, with inventory climbing in the fourth quarter. Now, looking at the new seller volume this week, we are seeing only 65,000 new listings plus unsold, plus another 12,000 new listings that are immediate sales. That's roughly 9% more sellers than a year ago. It's still a lot fewer sellers than normal for August, and is about 4% fewer sellers than a week ago. This seller volume is on the way down for the rest of the year. Fewer and fewer sellers each week on an already low number. So in this chart, you can see how we're now 3 Augusts into the restricted seller environment. Last year was the tightest. And I expect next year we'll have slightly more sellers each week in August, gradually transitioning ourselves out of this supply constrained market. There are now 7 states where inventory is above 2019 levels. So those are back to normal, you might call it. By this time next year, I expect a bunch more to be back to normal. It is important to point out that we measured the fewest immediate sales for August, since we've been tracking them. Immediate sales are those that get listed, they take offers and go into contract essentially immediately after listing, just a few days. This year, the tight inventory market, like the markets like the Northeast, or cash heavy markets like Orange County, California, both had plenty of immediate sales for the best properties. But so fewer immediate sales now tells us there's no urgency for buyers. We haven't seen any notable uptick in immediate sales, even with the slightly lower mortgage rates recently, but we're watching for any late season response in demand. On the purchase side, there were 65,000 new single-family contracts pending this week. That's just a tick down from last week and is a few percent higher than last year at this time. Yeah, I think it's encouraging that there are a few more sales each week than last year at this time, but there's no real sign of sales growth yet. Later in September and October, it'll be interesting to watch the new pendings each week. So that was that spike in mortgage rates in 22 and 23, which discouraged a lot of buyers at that time. So you can see in this chart of the new pending sales each week that the purchase slowdown, especially you can see it in October 22 in that light red line here. So do we finally show relative sales gains in the fourth quarter this year? Maybe. We'll keep watching. There are 368,000 total single-family homes with sales pending right now. That's just 2% above last year, basically unchanged, I call it. We're still in that 4 million annual pace for home sales. It'll be tricky to measure any relative improvement in home sales in the fourth quarter. We don't seasonally adjust the Altos numbers. We're simply counting everything. So I'm of the view that seasonal adjustments that you're seeing in many data series, they've been less precise in the post-pandemic world. So we're just going to keep counting them and show how they are reacting year on year. The takeaway for the home sales rate, this new pendings line, is that maybe it's just a tad above last year at this time. And the easier comparisons, though, start later in September. That's when we're really going to watch to see if we get sales gains. The median price of single-family homes in the U.S. is inching down now and for the rest of the year. The median price of all homes on the market in the U.S. is single-family homes is $449,000 now. That's just a fraction of a percent lower than last year. It's unchanged from last year at this time. We are past the seasonal peak in pricing. So what we're looking for now is whether sellers do more aggressive discounting this fall than last year, or do they simply not discount and just withdraw the listings to try again later. The price of the newly listed homes this week is $399,998, so just a hair under $400K. The new listings price is also just barely ahead of last year. That gain has been compressing. Recently, new listings were 2, 3, 4% above last year. Now it's in the 0 to 2% range. So the new listings prices should hover in like the 390s for the month before declining later in the fall. The price of the homes going into contract this week, that's what we're showing here, is $385,000. That's a notch of 2.5% down from last week. It is hovering about 4% higher than a year ago. So the listings prices have compressed to essentially no price gains over 2023. And the sales prices are still just a little bit above last year. And you can see that in the dark line here for 2024 is running just above the last 2 years. 2022 was when we had prices drop. You can see that in change in June and in September here in the light red line. Last year was more seasonal and is why we ended 2023 with home price gains over 22. So I expect us to follow a more seasonal curve this year and end with this 0 to 3% home price gains over last year. Right now we're at 4% gains, so compressing just a little bit more before the end of the year. And just about 39.9% of the homes on the market have taken a price cut from the original list price. In the next month or two, as inventory starts to decline for the year, the percent of the homes on the market with price cuts will also decline. There's a normal, natural seasonal curve here. Withdrawals increase in the fourth quarter. Anybody who hasn't gotten their offer pulls their listing over the holidays, and so the total number of homes with price reductions drops. So we're close to, not there yet, but we're close to the seasonal peak in price reductions. And unless we get a mortgage rate spike like we did in the last 2 Septembers, then price reductions would kick up again too. So in this chart, you can see how we're just about even with the price cut levels of 2022. In September of that year, mortgage rates jumped. And as a result, buyers backed off, so unsold inventory jumped, so sellers cut their asking prices. And in the light red line here, you can see that jump in September 22. So the opposite trend is probably happening now or about to happen. Mortgage rates are falling, so if you're a buyer in this market, you're not getting scared, more scared each week. Demand will decline with the season, but will not exacerbate the season like each of the last 2 years. So if you're a seller in this market, hopefully you're pricing the property to move and not overpricing to begin with. Much of the year we've had this bifurcated country with some markets actually still getting overbidding and immediate sales, but other parts being very slow. I mentioned Texas earlier. Texas may have crested as inventory for the year. And in fact, Austin, Texas, that inventory in that market metro peaked actually a few weeks ago in July. So Austin leads the country with price reductions now, taking the top spot from Sarasota, Florida. And I'm going to be watching these markets to see if the price cuts have peaked also. The big trends from earlier in the year are shifting now. And that's why we do this data work each week. Like if sellers finally change their expectations, like we'll see the data quickly. Maybe mortgage rates have finally turned the corner. And so for buyers and sellers, these conditions can change quickly and it can be very impactful for smart decision making. So they need to hear the data from you so that they know how to act. You should join us at Altos. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that to join us and let's get started.